Not big move in the indexes. Remember the S&P, though, up 5 weeks in a row, about 1.5% from a historic high there. Take a look at the major sectors. Oil's up nicely today. We had a Saudi crude production unexpectedly fell in July. It's not helping energy stocks, unfortunately, but banks and consumer staples been a pleasant surprise for the last several weeks. Semis and banks lagging, but these are all modest declines here. I mentioned about 1.5% from a historic high on the S&P, and that's because of this wonderful rotation we keep having. It has saved the market time and time again. Tech has been the market leader for the year, but if you look at the third quarter and what's going on, really we've got healthcare doing well, industrials doing really well, consumer staples has been the pleasant surprise for the whole quarter, and we've talking last week, of course, about Kraft Heinz and Clorox. Just put up Tyson here. Tyson's along. All the other consumer staples had a horrible year. Must be down 13, 14%. You see that there. But a little bit of good news today as they did beat on the bottom line. And very importantly, while they talked about the same thing, higher prices for chicken feed, higher labor costs, higher freight costs, they said they were raising prices. And we have seen a number of these consumer staples companies announce price increases. We'll see if they stick, but that certainly put some kind of bottom to them. Consumer staples about 10% since bottoming in May or June. We're 80% through earnings season. The numbers have held up very well. The most important thing is Q3 numbers at 22.7%. That's down maybe 0.5% from the start. That's pretty good. Normally they come down more notably. So the year is holding up very well. 2019, most people have about 10% increases. So not peak earnings yet, but still the important thing that Q3 holding up here. Meanwhile, our markets are not being affected much by tariffs. But look, it was another ugly night over in China. Shanghai, Shenzhen, look at that, down 2% on the Shenzhen. That's really had a hard time. Hang Seng didn't move much. Nikkei didn't move too much at all. But just take a note here about where we are off of the highs here. We have really seen notable declines this year in China. Obviously, some of this is currency related to tariff issues as well. The S&P is 1% off of new highs, but the Shenzhen's almost 30%. That's locals trading, mostly the Shanghai 25%. I'm just putting up for reference, Vietnam, Germany's off 8% off of these 52-week highs that we've seen. And some of these big China big cap tech stocks that we talk all the time about, well, they're down rather noticeably. Tencent, JD.com, Alibaba's down 14, Baidu a little bit better, down 4.7%. My point here is it's been rough over there, both for the currency and for the China markets, China local A-shares market, what the locals trade, and that's primarily the Shenzhen. So all of this trade talk definitely impacting China's viewpoint. Down 63 points on the Dow. Carl, back to you.